How large is the corpus of mutual funds? Can this become the criteria to invest or not? That's what we are going to tell you in 2 plus 2 equal to 5. The amount of money a mutual fund scheme holds and manages is known as AUM or Assets Under Management. This is also called the fund size or asset size, which includes the sum of money invested by a retail investor or business. The size of AUM keeps changing based on the daily amount invested or withdrawn. Let's take a look as to whether the size of AUM affects your return.
The size of the fund does not really impact equity funds' return. The scale of the Indian stock market allows equity funds to have high AUMs. Additionally, the decision to invest in a certain fund or not should not be based on its AUM or fund size. Before deciding to invest, one should consider the track record, expense ratio, fund manager's background, fund house credentials, and risk and return measures. A large number of AUM does indicate that a fund seems to be well, but it does not ensure strong future performance. However, just because a fund has a smaller fund size, it does not mean you should reject it.
Let us understand it with an example. Axis Bluechip Large Cap funds have an AUM of 35,822 crore rupees, whereas Nippon India Large Cap has a fund size of 11,951 crore rupees. Speaking of return, Axis has given a negative return of 8% in the last 1 year and 13% in the last 3 years. While Nippon Fund on the other hand has given 4.5% return in 1 year and 18% return in 3 years. Most investors will choose Axis Bluechip because of the size of its net asset, but Nippon India Large Cap has historically earned higher returns over 1 and 3 years. Now let's look at the debt mutual fund. For a debt fund size or AUM is more crucial. The benefits of having a debt fund with a large AUM include those costs that are reduced because large funds have lower expense ratios, which results in higher returns. On the other hand, a large debt fund size will find it challenging to liquidate as it retains larger amounts if the debt market becomes illiquid and there are higher withdrawals from that fund. Shweta Jain, CFP and founder of Investography, says size does matter but not beyond a point. We have seen extremely large schemes struggle to perform due to their AUM size. The most crucial thing for an individual investor to keep in mind is that a fund's performance mattered more than its size. So overall, we can say that for a performance of a fund, more than its AUM or size, other variables like portfolio quality, expense ratio, experience of fund manager and its risk-return metrics matters. However, this becomes more important in a debt fund. While choosing a fund, investors should take into account the fund manager's skill sets, the fund house's track record, the team and the processes. Choosing investments that are neither too large nor too small, size shouldn't be the only factor when selecting funds, especially flexi cap, large cap or fixed income funds.